Hello, everyone. My name is Igor Tomic, and today we are at our episode of Fintech Garden News Harvest. And today, with my co-host Dimitro, we're going to discuss three top news that we found especially for you in this week. Despite of the being summer time, there are a lot of different news. And today, we're going to start with the pretty astonishing news for European Union because European Central Bank has approved the first phase and as investigation phase for digital euro. And it's a big hot topic which overlaps what is happening overseas with the stablecoins. And let's see what is going to happen with that in the European Union. So, Dimitro, hi. What do you think about that?
Hello, Igor. Nice to see you again. Yes, this is a very interesting move. Well, this is a big step forwarding to European digital euro project, and it's moving basically into investigation phase when European Central Bank will see and research the legal framework for implementing this. So the trend is clear after the United States signed the big, nice, wonderful bill, and it seems like European Union will stay in the trend. Seems like other countries will do the same. We entered in a phase of legalization of a stable coin, not only legalization, but linking them to the real economy, real GDP of the countries. But I don't think that we will have we'll have ability to pay a croissant or I don't know cornetto or a gelato with or Romanian tsuika with European EU euro just yet. It means that this phase, usually European bureaucracy takes a lot of time, so this phase will take 24 months and something like this. But I'm sure that at the end we will have a very interesting approach and logic for smart contracts, the interesting launch for European digital currency, and who knows, maybe we are not so far away from this.
Yeah, and another news that is overlapping, actually, there is an estimation for the cost of this project. And one of the potential costs that one of from the big four company is saying that this project might cost up to 30 billion euros, which seems to be a really big investment into the infrastructure. So what do you think about this cost?
Not the biggest cost we saw, by sure. Of course, it takes time, it takes money. I'm 80% sure that we will have much bigger budget at the end. Not this specifically sum of money. The investment is needed in this. We need to stabilize. We need to we as European Union, we need to stabilize and to be ahead of the market, or at least in the top leaders of this. So this investment is not investment in just spending the money, everywhere we want. It's basically spending the money for securizing our currency, European Union currency, and securizing our financial independence in future.
I think you can, like our listeners can listen episode when we are discussing the digital payments, which we done previously. So please, we can post the link in the description. So please review. It will give a lot of insights how potentially digital currencies are working.
If this conversation made you think, make sure you're also signed up for a Fintech Garden newsletter. Each week, we share lessons from the field, what's working, what's breaking, and what to pay attention for when you're building a real product in fintech. Whether you're refining a strategy or shipping under pressure, you'll get tools and context that help you to make better decisions, not just follow the trends. Subscribe at the link in the description, and we'll meet you in our inbox next week.
And the second news coming from United Kingdom, and actually the FCA introducing the rules for buy now, pay later. What do you think it means for the market, especially for the UK market?
I think this question is mostly addressed to you because you're from us, both of us. You're mostly working with buy now, pay later products when I'm doing this. But yeah, this is finally, I would say finally, we have a regulation here too. Even if buy now, pay later was grosso modo in the framework, so was right and square. There were some things and requests that we needed to apply in addition to have better understanding of some small parts of regulations and so on. But exists a risk that because they want to take this buy now, pay later and include in Consumer Credit Act, which meaning that big firms like Klarna, Clearpay, or wherever they will need to run for affordability checks. They will need to run much more check on users and customers, and it means not everyone will be able to do so in a proper way. So possibly for some of the players, it will be a big push. But in your case, with you having more experience with this, what do you think?
I would say it's not that straightforward. I couldn't say that actually the businesses which are operating with the buy now pay later, they're just looking for some kind of vanilla metrics for growing number of the users. The models that I have seen with the established institution is to create a portfolio, actually, which is working because you are not just onboarding some random guys to make sure that you have minuses on the balance sheet, and that's it. So I would say some standardization might help because it will give the ruler or the scale, which can be like a measured portfolio from the company X to the portfolio of the company Y. But I think the whole idea of buy now pay later, it comes from the understanding that the credit unions or credit checks are not good enough. So it's something in between, and maybe a fragmentization. In this case, I see it as a fragmented. Like, okay, we have credit scores, we have credits, we have credit cards, we have more trendy and more Gen Z oriented buy now pay later. And if certain standards will be there, it will help to measure, cross measure their portfolios. But it should not like kill the whole industry because we have buy now pay later, because actually it works and it showed that a lot of people underserved and they cannot go through the credit standard credit checks because I don't know, being a student in the United States means that you don't have a credit history. That's why you cannot get the credit. So it kind of becomes a loop. And in this case, I think it will play well for the UK market. It will show more trust for the people to use this model, and I think it will help like to grow and more grew this model in this market.
It can help. By sure, it will be some big shifts in the market in the United Kingdom. We just a small reminder. Last year, 16 billion pounds were was the turnover of the entire market of the buy now pay later in United Kingdom, which means this market has a huge potential. Currently, in this amount, in this turnovers, everything seems to be right and square, and everything is in the framework. But exists a risk, and we know from the past that when sometimes goes wild in a new market, in a new niche, it can destroy everything or destroy at least a half of the economy around the globe. So it's good that regulators in the United Kingdom took this initiative now. Exists also, as far as I heard, unofficially exists a risk that some can use this buy now pay later scheme as a money laundering. So the authorities are a little bit scared also about this. In the same time, this trend, everything what's a new trend, specifically in fintech, can generate questions and can generate instability in the understanding how the market works for those who are at the regulations, because we know that all the time regulations are a little bit behind from the market. But if we're speaking about being behind of the market, let's move to the third news, which is on the other side of the ocean, of Atlantic Ocean, where the market is not behind. It goes really in big steps also regarding crypto. So the Genius Act, the big, nice, wonderful bill is in place. Yes, is in place. And we, so four big banks, American banks like JP Morgan, Goldman Sachs, Citi, Bank of America, they already, Morgan Stanley, they announced that they are launching stablecoins and tokenization deposits on their bank, on their systems, in their environment. It means it's a first step after the act was approved. It's a first step. It's basically an institutional version of USDC or USDT. It's private. Of course, it will be some kind of private tokens, but it will be bank-issued tokens. First time in the history. So bank-issued tokens. If this happened in America, coming back to the first news we were discussing about digital European currency, seems like in a year or two we will have the same, or three maybe, we will have the same thing in Europe.
And it shows once again that Innovations come to the all layers of the fintechs and the financial industry. It started with companies from Virgin Islands or Panama or whatever, but then the adoption comes to the established and institutional organizations in the United States. So it shows a really good appetite for innovations. I would be waiting how it will affect the whole infrastructure, because here we changing the most like basic gears of the money movement. Because instead of moving the real fiat with the existing clearing houses, with the existing accounts for holding overnights, we're shifting to another digital era, I would say. So it shows that we will have a lot of changes into how we actually dealing with the money. So it's a pretty interesting time to be alive and see all those changes in real time.
Yeah, it's specifically the biggest argumentation of this, you were talking about Virgin Islands. So specifically the discussion, the main argument of this is that finally Americans will have access, like Europeans does, like we have, finally Americans will have access to easy cross-border transfers, which means that they will be able to buy, to purchase everything they would like, from big suppliers or less, not only using credit cards and not transferring money via SWIFT, but paying directly with their bank account. So it'd be basically a new product, a account-to-account product. And I think the stable coins will shift, and already I think they shifted from the crypto news profile to banking news profile, because I hope in next few weeks we will see how CNN or other big channels, broadcast channels, TV channels in the United States, or business channels around the world will start to show, the index rates for these stable coins, maybe private issued by American banks, or maybe USDC, USDT, who knows?
Yeah, and let's see that. And thank you for the discussion today. It was really nice, and despite of the summertime and some slowdown in the business, I think we still see great news happening on the market, which will affect the business season, which will start, I don't know, in 5 weeks from now.
Yeah, sure. Let's see what's happened.
Thank you so much. Please subscribe to our channel. Please comment if you have anything to share with us, and we're looking forward to hear you back.
Have a nice weekend and stay in touch.
Thank you so much. Bye.